So yeah, we're gonna be pretty much picking back up where we left off last week. So all right, last week we were talking about my actual trading strategy, right, and the different concepts that I actually use. So with that being said, last week we ended up covering how to actually draw out my levels, which was going to be the overnight high and overnight low, previous high of day and previous low of day. And then we also talked a little bit about how to actually use individual tickers as confluence when we're actually, entering a trade. So, what else do I like to incorporate in my trading strategy? Well, um, I always like to start off every single Sunday or Monday, and that's when we actually do the weekly watch list. And that's gonna really just be me going into the larger time frame. So I'll give you kind of an example here. So, right, I'll go on my charts. Let's just say it's Monday, um, Sunday or Monday, right? I'm going into my charts, and then what I'm gonna be always doing first, I'm always gonna be switching over to the larger time frames, right? So every single week, I'm switching over to the larger time frames, usually the weekly, and I'm checking where we're actually sitting, on the larger structure, right? So the reason why that is because the larger structure, right? That's always going to tell me, what potential bias we could be expecting when coming into the week, right? So here I'll take a look at what we're doing, right? Last week we had, or the start of this week, we had a couple of imbalances to fill, that were slightly overhead of us, right? Up to roughly 490, right? So when we're looking to identify these larger time frame imbalances, right? This could potentially set us up for larger breakout moves when we're actually coming into the week, right? So right now on the week, we're sitting right at 479, but it definitely looks like we are going to be setting up for a, another imbalance slightly below us, right about here, right? So going into the week here, you could definitely expect to see, right, that we will actually have probably two imbalances to actually fill, one overhead and one below us, right? So what this tells me is that, okay, all right, we could be stuck in between, some type of range. So once we actually get, a break into one of these structures here, right, that can initiate our move to actually fill, one of these imbalances, right? That kind of gives me an overall bias of, like I said, what we should be expecting for the overall week. So then I also head over to the daily, right? Do the same exact thing, right? Mark out any smaller time frame imbalances on the daily, or any potential setups that we could be seeing on this smaller structure, right? Because obviously within all structure, right, there is some type of smaller structure that usually will be starting to form um, pretty much usually as the week goes on. So it's really important to always keep an eye out on the different time frames and not really just focus on one, especially if we're in the day trade, right? So yeah, that will be the first thing that I do pretty much every single week, right? And you guys do also come in, tune into that and watch. So, right, most of you do already know that I do that for the start of the week, right? From there, right, let's just say Monday rolls in, right? We get into the pre-market. What do I do from there? Well, I always go to the pre-market, right? I see where price actually ended up moving from the previous day, right? And that's when I'll actually start incorporating uh, the levels that we, decide to chart out. So we'll start incorporating our previous high of day, previous low of day, overnight highs, overnight lows, and then we'll also try to drop our time frames, right? So normally when we do our watch list, we'll be doing um, the weekly and daily time frames. But as we start to go into our intraday setups, aka we start looking into our actual day trades, right? We're really gonna be wanting to shift our time frames down to the smaller ones. That way we could actually see what we could be expect for the following day, right? So a lot of times, right, I'll usually hop on first the 4 hour time frame and identify what type of structure we could potentially have. And I'll get into an example of this in a second here. So right, I'll maybe hop onto the 4 hour. We're on the 4 hour right now, and then maybe we're like, okay, we see that there is a clear higher low structure that's kind of coming in here, right? When we have this type of structure, right, a lot of times we're waiting for some type of break within the structure. So this is, something that we definitely could have been looking for yesterday to actually, anticipate that actual, breakdown that was going to be coming in from QQQ yesterday. So, like I said, right, I'll hop into the 4 hour, right, identify some, potentially smaller setups here that could actually allow us to get some type of breakout. So we see right here, we actually did have, a 4 hour bull flag that we ended up forming. And then, yeah, even over here, right, another smaller 4 hour bull flag. But what this allows us to see is, potentially areas or zones where we could anticipate consolidation, or, if we break up above certain structures on, the smaller 4 hour structure, that could allow for some potential, continuation throughout the actual day. So once we actually do that, that's when, either market open will happen, and that's when we'll actually start getting into our smaller time frame structure, aka, the 5, 15, or even 1 minute structure, right? So I think Tuesday was a very, very good example here of what I'm going to be talking about. So Tuesday, which was right over here, we had a short entry right about over here. Now, what are some things that I was actually taking a look at, on Tuesday? So this Tuesday setup was actually going to be that silver bullet setup that we were watching, I believe with Ton. I think we took the setup with Ton. But yeah, here overall on the setup, the main thing that we could actually pay attention to on the 4 hour here is that when we're actually looking at this 4 hour, if we go back to Tuesday, we see the top of that structure was going to be pretty much roughly around the swing high from the overnight session, right? So a lot of the times, I believe I actually came into this current day with an overall bearish bias as we started to have a little bit of a curling top right here. So when we start to see this type of structure come in, right, we could definitely expect almost a mini reversal that's kind of coming in here, right? Another thing that's also important to note is that we had a 4 hour imbalance that we were actually looking to fill slightly below us. So, right, looking at a lot of these structures here, these are some things we could actually, look for when we're actually trying to take, these day trades. So now actually going back into that structure there, right, obviously, for the start of this day, right, we had a nice little, pop up, above its previous high of day, which would initiate, that break of structure, which is something that we talked about last week, right? Whenever we do get this potential break of structure or break above previous day's range, that's going to initiate a break of structure, which should a lot of times allow some type of continuation. So in here, this case, right, we have the red line here, which is indicating our previous high of day, right? We are above view up, and we are also flagging on that 5 minute time frame right here. So what happens from here? Well, get that break above, right, and we kind of retest, consolidating, and then right now that we've confirmed that we are going to be using that previous high of day as support, right, that's going to allow us to actually initiate that real breakout, which you see, kind of follows through right about here. So now what actually happens, when we actually decide to take that short? Well, first thing that I was looking at with this particular trade here is that we could see that, right, we had a very, very nice bearish, almost engulfing candle right here. And then if we go back actually on the 1 minute time frame, we go back to Tuesday, the main setup here was going to be an actual silver bullet setup. And this is going to be actually another big part of my strategy. Not necessarily silver bullet, but actual imbalances and fair value gaps, right? Because remember, there's two things that the market seeks, right? It's going to be imbalances or liquidity, right? So in this case, right, we had a pretty much a perfect 10 a.m. Silver bullet, right? We had our first 10 a.m. candle here, and then we had the formation of our first 1 minute fair value gap. So, silver bullet, first 10 a.m. imbalance gets formed, we would like to see a tap into that price, and then we would like to see, a continuation towards our next level of liquidity, which I believe was going to be actually on the 15-minute time frame. So with that 15-minute structure, it was going to be the liquidity resting at the previous day's close, because as you've seen before, right, towards the end of day on Monday, right, we had that really aggressive move up, and also I believe that was a 5-minute imbalance. So with that structure there, right, we were looking to fill imbalances, and we were also sweeping that liquidity at the low, which would have been right at 478.98. But yeah, with that trade right there in particular, like I said, right, that's going to be using another big concept that I use, which is going to be the formation of imbalances, but also the structure of continuation patterns. So here we have a very nice continuation pattern, right, also known as a bear flag, right, and we did cover that with, I believe, our first bootcamp class. So remember, with that first bootcamp class, we talked about how to actually identify and draw out these continuation patterns here. So right, like, once again, this is going to add some extra confluence within our actual setup here. So right, bear flagging structure, 1 minute silver bullet, back test into this fair value gap, and then once again, right, we are really just looking to seek liquidity. So another thing that also is going to be important here when we're actually taking a look at the structure is identifying where price is actually going to be retracing back to. So in this case here, we see that, all right, we have that flag set up, whatever, and then we actually do get that breakdown. Yes, we could use the duplicated flagpole as a target. Yes, we could use VWAP as a target, and yes, we could use previous hive day as a target. But the main reason why it is important to also pay attention to where this previous hive day is, and the main reason why I use it so much, is because this can actually allow for range bound retracement, right? So what do I mean by that? Well, if we actually kind of come back to that particular day, we can see here that on this 5-minute structure, we initiated a break above previous hive day structure, right? But what is one thing that we actually failed to get above during this particular day? Well, the answer to that is actually going to be the overnight high, right? We have the overnight high level sitting slightly above right here, which is going to be that 483.12. And this is kind of going to be one of the main concepts that you really want to understand for when actually being able to identify some potential trend days, is that when we're looking for a trend day, we always need to, one, get above the overnight high, and we also need to get above the previous day high. That way that there is a clear, break of structure. That way we could actually continue to trend up. But you can see what we failed to do here, actually, we failed to actually take out, this previous high, even though we actually got above, the previous hive day. So what actually happened here? Well, you see that we initiate that initial break. So in theory here, this is actually almost a fake breakout, right? And the reason that is because this following 5-minute candle, right? Obviously, we got that break back below VWAP, and we also got that break back below previous hive day. So this candle right here, in particular, this initiated a break back of structure into previous day's range, right? So if we're coming back in the previous day's range, that means that we're not actually initiating, some type of breakout, and we are expected to continue to be, range bound. So in this case here, right, we see that we have the previous low of day all the way down at 473, which chances are we're not going to actually be looking to, break down towards. But once again, right, that's when we always want to go back to that concept of, where does price like to seek? Well, we like to either seek, imbalances, which is we have right here on the left hand side, right, we have this 5-minute imbalance that we created from that end of day pop. And then we also like to seek, liquidity. So liquidity also would be this 5-minute area right there, or you could also run, probably looks better on the 15-minute. But yeah, this is how you could actually potentially determine your targets for when you're actually looking at, some larger structures. So if we actually switch over to the 15-minute, yeah, it does look a little bit better here for that liquidity sweep at the lows. You see that we actually tapped off of that area pretty much perfectly. If I put a line literally right here, that previous area of consolidation on Monday, right, we held pretty much within that area, and from there, that's when we actually, got bought up. So what else do we do from here? Well, another big thing that is going to be important when it comes to actually just looking to take a trade is going to be the actual confluences, right? So confluences, and just having a proper risk management and trade plan is going to be probably one of the most important things when it actually comes to being successful in trading. Make sure your risk management is there, which I know we didn't really perform too well this week, but yeah, make sure your risk management is there, and also you do also want to make sure that you have some type of conviction within your trading setup. So I would actually like to take a look at probably another one that we did pretty well on, but I guess I'll actually go back to, I guess I could give an example of this one over here. So earlier I drew a little bit of a golden pocket setup, right? So that was actually a very, very nice structure going in for kind of like this move here. So that golden pocket setup was going to be from the previous overnight low. It's going to be this white line into the swing high of today, which is going to be the high of day. And we can see that we tapped really, really nicely off of the actual GP there. Sorry, not overnight low. We would draw from the previous swing low, which would be yesterday's low of day, into today's high of day. So now, what we actually get here, if we were to actually turn off extended trading hours, we can see there's a couple of things that we could actually take a look at here. So starting today, we've seen that we ended up having an actual gap up, right? And this is kind of going to go back to that concept that we were talking about earlier, right? What are the two things that the market seeks? It's either going to be imbalances, gaps, or liquidity. So with the setup here, we see that we do actually have a clear gap that actually formed from yesterday's close into market open today. So we have a gap, we have a fib level, and then we have almost a breaker structure, but also we did have a previous imbalance that we had sitting below us. And overall, this is just a very nice demand level that we actually got a back test of. So once again, right, this is going to allow us to get that conviction to potentially take some type of trade setup, right? I know a lot of you guys that follow ICT, most of you, when you look at fair value gaps, right, you either look for an entry when the actual gap gets filled, depending on obviously what type of trader you are. You either look for that full imbalance to get filled, or you wait for the consequential encroachment, which is going to be roughly about 50% of that imbalance or gap fill, right? So in this case here, if we actually draw a fib from this actual gap, you can see that the consequential encroachment is going to be right at 476.49. So that one right there would be technically roughly about your entry, but you could also see that when we actually draw fib from our swing low into our swing high, and we get that retracement, right, we can see our actual retracement price comes perfectly into this golden pocket, right, which roughly, like I said, that 476.50 consequential encroachment, and also 70.7, and also previous demand, which would be that was formed yesterday, right? This area itself would be a very, very good opportunity to actually potentially take a buy, right? And the reason why I say that is, one, right, price delivered in a discount, right? Obviously, because we had a pretty aggressive sell here, right? Delivered almost in a discount, right? Golden pocket, and also imbalances, right? So here we have at least three confluences, right? And that's going to be, a really, really important factor when it comes to actually, being able to take this trade. So, what is your potential risk here? Well, your risk is going to be a break um, below the 78.6 or a break below the actual imbalance. So here, your stops would probably need to be a break below that imbalance, which would be about to 475. And then your targets would probably be where? Well, our next leg up, right? If we were to actually take this, we could actually have multiple targets when we're looking to do this, right? And this is why it's important to actually have, either the overnight high levels, um, previous high of day, right? We could use these levels as potential targets when it comes to actually taking a trade. So I'm going to turn back on extended trading hours here. That way we could see, what our potential targets could actually be. Well, obviously we see that we do have, our overnight high sitting pretty much right at 479.75, and VWAP that is also sitting right there. So this right here actually should be your, final target up here, because this is our next area, as well as we do also have, a 5-minute imbalance, right? What does the market like to seek once again? Right, we like to seek imbalances, and you can see, right, what actually happened. Well, we ended up pulling up, right? Obviously, you're not going to be holding for a good chunk of this move, but a lot of times, right, as you know, we do like to take, some trim positions. So in this case, right, we could actually have a couple of different targets, as if we did decide to take an entry within that GP, right, aka the 476.43 or the 70.7 entry, right, we could have a variety of targets just because our R to R is so good here. So, right, if we did decide to take this, right, we could obviously first target our formation of the swing low, or our previous swing low, which would be right around market open 9:30, right? We see we did have a previous low sitting right at 478.31. So this right here in itself definitely would have to be your first area or your first target. And then following that, if we are actually able to recapture above the structure here, right, where does price actually gravitate towards, following that? We can see that once we actually decide to hold this, right, our next leg up was going to be, you see, we literally just grinded all the way up towards our overnight high. But obviously here we see that this was data at 10 a.m., so we can't really take this candle in particular into consideration. But we can see for the most part, once we actually, had a recapture and a hold above the structure here, we actually pretty much just grinded up, which would ultimately lead us to our next area, or our next area of resistance, and also a couple of imbalances to fill, which would be, up to that overnight high and also VWAP area. So this, you could pretty much automatically assume, the same exact thing. Once we actually got, our price, once price actually delivered above, this previous swing low, and as you can see, we actually held it, right? If you take a look, right, price got driven up after holding that golden pocket, right, 61.8, 70.7. Price ended up getting pulled up, and we actually held above 478.15. Right, from there, if we can confirm that, price wants to deliver higher, like I said, right, our next leg up is going to be where? It's going to be sitting right at that overnight high and also VWAP, right? Once again, right, we also have other confluence that's going to be coming into play here, right? We have a 5-minute imbalance that was actually created right about here, and you could see, right, price delivered pretty much perfectly to the full fill of that imbalance up to 480.15, and price failed to get that break above, right? So there is no actual break of structure, sitting within this area here. So if I were to delete that, right, price ended up filling that. Once again, we would have hit pretty much all of our targets at the overnight high, and also view up there, and that pretty much would have been it, right? So your R to R here really is going to be nice, as you're able to mitigate risk extremely fast, especially after taking, your first trim. By the time you actually take your first trim, let's flip this over to NQ and see what the actual point return is going to look on this trade right here. So if we drew that from our swing low and the swing high, if we drew this from our swing low to swing high, right, your entry would have been off the 70.7, and your risk would have been a break below either um, that 78.6 or below overnight lows. So for me, I probably would have done below overnight lows. But in this case, let's just do below the 78.6. And then, like I said, your first initial target probably would need to be that previous swing low, which is going to be right about here. So I'll mark this down with the green line. Once again, we created that, 5-minute imbalance that we actually could look to target. And you'll see, right, there's a lot of confluences really that's telling us that, okay, this general area, roughly about, 19,760 to about 19,780 should be the area which we're actually looking to be targeting, just because there's a lot of indicators that really should just be gravitating us towards this price, and that those indicators it's going to be overnight highs, the fill of this actual 5-minute imbalances, and also view up, right? So in this case, right, you have, yeah, this is already at least a 1-to-1 or 1-to-2 R to R, depending on what you're looking at, just in terms of the actual first target here. So the second we tap into TP1, we could literally already automatically move stops to break even, which is something that we do very, very often. And then from there, we could actually let price continue to grind up towards what would have been our final target, that being either VWAP, overnight highs, fill of the actual 5-minute gap, and so on, right? Consequential encroachment, which would have been 50% of this imbalance, but right, that would have been the actual R to R, right? So we could see, right, when we actually tie in, all of these confluences together, right, this can actually allow us to develop, a really, really solid, trading plan when we're looking to incorporate, all of these different indicators, and factors within the trade here. So what are some things that we had? Once again, right, I'm literally incorporating everything that we pretty much have been using on a day-to-day, right? We're using the levels, right? We're using overnight high, overnight low, previous high of day, previous low of day. We're using different swing high, swing areas, right? We're using imbalances, right? Or levels of liquidity. So in this case, we had that imbalance. We had VWAP as a potential indicator for our targets, right? We had our golden pocket setup, which would have been the fib drawn from the previous low of day into today's swing high. And on top of that, we also just have a good R to R system, and then we have our targets in play, right? So once again, right, we have our targets, which would, allow us to mitigate risk, just as quickly as possible. So with this trade, once again, right, we would target that initial swing low, right? Mitigate risk, move stops to break even, and then from there, right, it'll become pretty much a risk-free trade if we were actually looking to, hold that structure up towards our final target, of view up and overnight highs there. Okay. So does anyone have any questions on that, or does this all kind of make sense to you guys for what I'm saying here? No, I think everyone's good.
All makes sense. Thank you.
Cool. All right, perfect. So yeah, that is pretty much how I would, try and add confluence in this, just my strategy alone. So I know today we are going to be covering about my strategy, and I kind of just did right there. But these are some factors that you really want to take into consideration, especially when you are um, trying to develop your own strategy, right? You want to have these check boxes, or you want to create some type of checkbox, um, so that way, when you do decide to take a trade, right, it's actually going to be able to give you the confidence and confluence to actually hold a trade, towards its, overall potential targets here, right? So in this case, right, what are some things that we want to always consider when we're taking a trade? Well, first thing, we always want to have um, almost a general bias, right? And that's kind of going to go back to what I was looking at earlier, right? When we're heading over into the larger structure, right? Is that going to be, or is the structure going to be following what our overall, larger time frame bias is, right? However, even though we have some type of bias, right, we don't also want to let that, cloud our overall judgment of what we're expecting, price to move towards, right? Because if we start to do that, then that's when it can get really ugly, right? And we're continuing to do, either shorting the market, just continuously in an uptrending day, or vice versa, right? So having a bias can be good at times, but it can also be bad. So, depending on what type of trader you are, right, you may or may not want to actually incorporate this into your actual trading strategy. But for me personally, because I know, my capabilities, right, I know statistically speaking, right, I literally have, 75 plus to about 80%, win rate overall. So statistically speaking, right, I know for a fact, that this works for me, and this can actually be, an extra confluence for when it actually comes to, me being able to actually take the trade. So that would be, one kind of checkbox that you would always want to look at. Kind of just make a box right there or something, right? Next up is going to be your confluences, right? Right. So your confluence here is going to be what I was talking about earlier, right? What is the setup actually telling you in order for you to actually, take that potential entry, right? So when we're actually looking at confluences, you always want to at least have three confluence. Every single setup you take, right? If you don't have three confluences, for me, that really isn't enough for you to take a trade, right? Three confluences, I think, is really going to be that perfect amount. Um, where you can, pretty much validate your overall trade idea without having to wait for, five plus confluence. Because a lot of times, actually, when you at least have that three confluence, um, you know, checked off, a lot of times when the trade actually starts to develop further, that will actually add on more confluences potentially, right? So what could I, maybe mean by that? Well, let's just say I'm just gonna kind of draw an example here, so it may not look the best, but let's just say we had a little bit of a flagging structure, right? Right, we had almost like a bull flag structure right here. We had this, we had this. All right, so maybe with this setup here, right, we were actually pulling up, right? Let's just say we were pulling up, and then we were looking for a back test because we formed, some type of fair value gap or imbalance here. But then another thing that we're going to be noticing is that, okay, we have fib, or we have overnight highs or previous high day sitting right here. And then if we were to draw fib, we would also see that, fib or the GP would line up also within, the fill of that imbalance, right? So this automatically in itself would be a three confluence trade setup if price was to actually kind of come back into this area, right? That would be a back test in the previous hive day, a fill of that imbalance, and also, a back test into that GP. But like I said, as the trade potentially starts to develop, right, that's when we could actually add more confluence within, the structure here, right? And that's when we really just want to analyze what type of structure we're getting. So, right, after price started to retrace back into this area, right, we noticed that, okay, we actually started to form a bull flag, right, which is going to be a bullish indicator. That's going to tell us that we should also continue to see, price send higher, right? If we're starting to notice that, there's a lot of regular standing hammers starting to form, right? We're getting a lot of wicks towards the bottom, which is showing that there is, this area overall is a demand area in which buyers are stepping in, right? That could also be, an extra confluence when we're looking to take a trade. So, when we actually have these three confluences and we actually let the trade, develop when we're actually in it, right? That could actually potentially, add confluences. So initially, right, we started off, let's just say with three, but maybe by the end of this, kind of breakout here, we'll actually end up having five confluences, right? So five different ideas, are telling us the same thing. A lot of times that's actually going to allow us to gain more confidence within a trade and actually hold our trade setup, longer for our final target instead of, taking, really, really early trims or, being scared that price, may pull back, and we'll get stopped out, right? So when we have a lot of these confluences telling us the same thing, like I said, that will really just allow us to hold our positions just a little bit longer. So that should be actually a really big part when it comes to actually having your confluences, right? Always have at least three, but obviously the more the better, right? I think with three, you could almost consider that nearly an A setup or maybe like a B plus setup. But the more obviously you have, right? Once you start getting into four, five, six confluences at a time, right? That's when it'll actually, slowly start to actually pick up to probably, a potential A or even A plus setup. So from here, right, is going to be your actual take profits and stop loss, right? Every single time you take a trade, you always want to have these two things in mind, right? Take profit and a stop loss every single time you go into a trade, right? You want to understand, if I was to take this setup, right, where would the structure tell me that it is no longer valid, right? Because obviously, if we're taking a trade, and a lot of you guys, this happened with you, this week, right? I was in a larger setup trade, but a lot of you were really unsure of, at what point should you actually stop out at, right? But for me, even though I was down, quite a bit, right, I still had conviction in the overall setup because it was a larger time frame setup, right? But just because, I'm in this setup may not be, the same thing that you're looking at when you're actually in it with me. So once again, right, always want to have your take profits and stop losses set into play, as that really can save you from actually losing a lot of money. So in this case, we're going to kind of continue on with this, example here. So let's just say, right, we started to form this bull flagging structure. As you know, right, I'm always going to be taking my entry off of, the lower trend line. So let me actually, what I'm going to do, I'm going to actually flip over to trading view. That way you guys can actually see um, the actual R to R when we actually look at this. So let me just switch my screen over really quick. And then let me also switch my OBS. Cool. So, all right, I'm gonna draw out pretty much the same exact thing here. So, right, we had almost that bull flagging setup. And let's just say we had, I don't know, maybe it was overnight highs or previous hive days sitting, at that kind of level there. And then we also had fib that also lined up. And then like I said, maybe we had some type of imbalance that was sitting, also within this general area there. All right, so once again, right, this is already technically 3 to 4 different confluences in itself. But now we're actually looking to determine our R to R, right? So now this is going to be another important factor when it comes to actually taking your trade, because this is actually going to allow you to, determine whether or how fast you're actually able to mitigate risk, depending on, obviously what your overall entry is going to actually be. So in this case here, as you guys know, right, I am a reversal type trader, which means I am going to be looking to take, a little bit more of an earlier entry. That way I'm able to, one, mitigate risk as quickly as possible, and that way, two, my R to R actually increases quite a bit. And this is something that we actually covered within our first class, right, when we were actually talking about the different ways you could actually play continuation patterns. So remember, right, the first way is going to be actually waiting for the breakout of the actual flagging structure. So in this case, this is something that you could potentially do. So let me just do this. Right, so in this case, if you were to wait for the actual candle close above, this flagging structure or whatever, right, you would obviously, one, need to wait for the candle to close above it. And that could look like, really anything, right? We could close, slightly above the actual, upper trend line, or we could close, way above, potentially all the way at like 20,220, right? So we could actually close pretty much anywhere, during this area here, but overall, right, that can be a little bit risky, as we're really unsure of, are we gonna get, a actual good entry, and is it even gonna allow us to get some type of pullback, so we could actually enter. But once again, for me, as you know, I am a reversal type trader, so I'm gonna be actually looking to take that entry on where all of my confluences lie, right? So in this case, where are my conflows sitting at, right? They're sitting pretty much right within the golden pocket, which is going to be one, right, the 70.7, the previous high of day or overnight high level that we had sitting here, and also that imbalance, right? So this here is going to give me the best R to R when it comes to actually taking the trade. And then if this setup was to stop out, right, your setup actually would be 100% invalid. That way, you're not questioning yourself of, could I actually still continue to hold this trade, right? If you were to actually stop out with this trade, the setup would be 100% invalid. That way, you know for sure, right, you were not right. So, once again, when we have our, you know, entry slightly early for me, right, I take that earlier entry. Like I said, my R to R increases by a lot, but at the same time, I'm also able to mitigate risk as quickly as possible here. So, for this case, we're not going to be using any other indicators besides kind of like what I have here. So technically we could also have VWAP incorporated into this and also 200 EMA. But for now, let's just kind of, ignore those. How could we actually determine our targets? Well, um, once again, right, we want to add confluence to when we're actually also determining our targets and not just, looking to take our entries, right? So our confluences could be, potential imbalances that we have overhead, right? So maybe on this leg down, right, we did create another imbalance that was going to be sitting overhead of us, or maybe, I know I told you to ignore, but maybe, slightly overhead of us, we have VWAP sitting above, right? So a lot of times, these are going to be, potential confluence that could tell us, okay, this area, may be a better final take profit, or this area would be, at least a decent spot to actually trim my position. That way, I'm not going to be putting, the whole entire risk on, the overall setup. So let's just say, in this example, right, we had an overhead imbalance that was sitting right about here. So this actually would be my first initial trim area. And then my final target would be obviously the end of the duplicated flagpole, right? That's something that we covered with our last class, or with our first class, sorry. So, right, if we were to actually kind of come up towards our overhead imbalance, right, this a lot of times is going to be our first area we're going to be looking to, reduce our risk. So for me, you guys know I usually trim about half of my position always, and then usually from there, I'll either move my stops to either break even or in profit. That way I have a completely risk-free trade. So, even if price was to actually pull back, I'm still going to be walking out with something, and I'm not going to be walking out, fully red. So once again, right, if price was to come up and tap into our imbalance here, right, we can move stops to break even, or like I said, in profit. And from there, we have a completely, just risk-free trade, and we could actually, let price deliver towards our final target if it wanted to. And then if not, right, if we get stopped out, yes, we did give up some potential profits, but overall the trade still ended up, netting green. Right, so let's actually try and find a example of this, which I believe we had not too long ago. Well, I guess we could actually take a look at that silver bullet setup there. If I could find it. It goes this one.
10 o'clock.
Yeah, it was right here. Okay, so let me actually hop on to the 1 minute as well. So Tuesday, 10 o'clock.
Uh, Alex, are you talking about the example today?
Yeah. So I was gonna go back to that silver. Oh, well, you actually want to go over yours actually? Yeah, I actually really like that trade actually. Let's do that. So Chin today actually ended up taking a long position. Oh, let me actually go back to my Thinkorswim because we actually have that already set up. But yeah, anyways, these are the three main things you always want to have when it comes to the trade. But let's take a look at a real example of that for the trade that Chin took today, which was going to be under the 1 minute time frame. and that was gonna be right over here. So Chin ended up taking a, you know, a long position off actually the structure right about here, and I think he actually played this extremely well, um, just based off of the confluence. And this is actually literally gonna go back to what I was talking about, right? These exact confluences that I was looking at. So Chin ended up taking a long position at 10:06. You could see he posted it in the, what is it? I forget what the tab's called. Oh, lessons learned tab, right? He posted his stock journal. Um,
775.
yep, yeah. So 19775, which is going to be roughly right about here, right? Very good entry by him. But just looking at this trade in itself, what are some confluences that we have to tell us that we should be actually taking an entry within this area, right? And that's gonna really go back to what I was saying. So first things first, we want to determine our confluences, right? So here we see that we have overnight high, right? This is automatically pre-charted out, right? I'm not doing this manually. So we have overnight high sitting right here. We see that we have a 1 minute imbalance that's sitting right here. Perfect 1 minute imbalance. All right, consequential encroachment is going to be right about 50% of that, which would be slightly overhead, but it's not the worst, right at 86. So yeah, this would technically be a bit of a discount. And then if we were to draw fib within the setup here as well, this would also be a very nice fib spot. So boom, this is what the setup was looking like when he actually took it, right? So in this case, right, we have definitely for sure 3 confluences to actually even take the trade, right? So we have one, right, the break of structure above overnight high, and this would technically be a retest, right? So a lot of times, right, when we're looking at break of structures, we always want to see that initial break, and then the retest is a lot of times where we usually actually look to take our entry. And then on the retest, we see we have a lot of confluence to actually take the setup. So one confluence is going to be the overnight high back test. Confluence number 2 is that we formed a 1 minute fair value gap. And then confluence number 3 is we have the golden pocket sitting, right where his entry is, right at 61.8 is going to be right where overnight high sits at. So this in itself is going to be very nice confluence for the trade to even just tell you to take it. So right, he did have a entry at 19775, and then once again, as you start to let the trade develop, right, after your entry kind of comes in, this will tell you, okay, can you potentially hold the trade for a little bit longer, or what is price potentially um, looking like. So in this case, we see that after his entry, the 1 minute candle actually ended up closing as a regular standing hammer. And if you guys know, right, if we actually just pull up the candlesticks tab, right, you guys know what type of candle is a hammer candle, right? This is one of the second most bullish candles that we could actually be seeing. So, right, this is definitely going to be a good sign for us, especially since, we had a very good entry to begin with. So, definitely your risk here is going to be, a clear below the low. And then your targets, how could you determine your targets on this 1 minute setup? Well, it doesn't really look like we have too many imbalance to actually fill, just because price, delivered relatively quickly towards the upside and then came down also really quickly. But one thing that we can actually look at is, one, we could obviously go and switch to a different time frame, right? So having confluences throughout different time frames also can be a really another good thing. So here, obviously the first level we can target so overhead liquidity, aka the previous high after taking that entry. So the previous swing high would definitely going to be up to that 19,868, which I believe is where you actually close, if I'm not mistaken. Let me get rid of this. So I believe that is where you actually close. 19.8, yeah, right around, yeah, literally exactly where you close. So you can see that Chin here, in this case, because he was trading a 1 minute setup, he actually had 1 minute targets as well, right? So he had this entry on the overnight highs, but all he was targeting was just the liquidity that was sitting overhead, or aka the previous swing high, which is going to be right at, once again, 19,868, which is where his final target was. Can you potentially trim throughout the setup? And I'd say yes, but it probably wouldn't be under a 1 minute structure. So if you actually take a look at this here, had a back test there. So yeah, so for me, my first actual trim level would probably have to be right around 19,829. And the reasoning that is because if you actually, just look over to the left slightly, we can see this was a previous swing high, right? On this left hand side, we see that, we previously kind of came up, tapped into that level there, and we rejected it immediately. So technically, right, we could actually do the same thing in this case. But overall, as you can see, right, we did end up running straight past that on a 1 minute. But overall, right, that actually, for me, wouldn't be a terrible spot to trim, as I would still deliver, let's see, if you had an entry there. Yeah, I would still deliver roughly about 60 points for your initial trim, which is still really good. And then from there, right, you could definitely move your stops to break even. So this here is going to be overall your R to R. And then for me, once again, right, once we come up to that 29 area, right, I would look to at least close half my position there, right? And then from there, I would move my stops to break even. And then following that, right, I would look the final target, which would be that previous swing high. So here, right, not too many confluences, honestly. We really only had the three, but we could see that price actually delivered very, very quickly, or technically four confluences. We had four confluences here, and we did see that price delivered really quickly. That way, there really isn't any hesitation in price, right? When price starts to chop or really consolidate, right, that can get a little bit iffy, just because, right, there is no real clear direction. But here, because price delivered really quickly, right, you're going to be in and out of your position fast. And also, there is no question of whether or not, buying pressure is stronger or selling pressure is stronger, right? We could definitely see that for sure, just even based on this 1 minute candle here. We had a nice hammer candle, which is definitely going to be showing that, buying presence is definitely going to be here for sure. Okay. Any questions on this so far? Or pretty much what I talked about in general, but, just being able to find your confluences, or the things that you really should just be looking for every single time, you take a trade, right? Your bias,
Uh,
confluences, and take profits and stops.
uh, Alex, can I just share some comments? Okay,
Yeah,
so
sure.
the, the second trade I took was successful, but previously I took the one trade just right
Mm-hmm.
after the open,
Yep.
and I thought it's going down but obviously I got run through and the J Power was talking, so I just got stopped out.
Yeah.
And what I want to say is that when we looking at this kind of trade, okay, I I kind of do the back testing and I realize one thing, okay, if 5 minutes candle after the market open, if the 5 minutes candle is less than 50 points,
Mm-hmm.
then usually that's not what we call displacement. It
Mm-hmm.
needs to be more than 50 points. Yeah. Uh, just an idea. Yeah.
Yeah, no. That definitely makes sense because obviously displacement, right? When we actually take a look, let's take a look at this candle here. So 9:30, 55 to about 7:16. Yes, that was roughly a little under 40 points right there, right? But obviously, displacement. This would be definitely a displacement leg right here, right, for sure.
Yeah.
Um, so a lot of times when we have price that moves like this, right, a lot of times we could expect some type of retracement. But when we don't have a displacement leg, right, that a lot of times is going to initiate some type of consolidation period, which means that we're anticipating or we're waiting for, some type of break of structure to, honestly happen. So in this case, right, was your overall idea bad? In my opinion, no. But what really got you was definitely going to be that 10 a.m. candle with data, right? So that really is,
Yeah.
something you really can't control. But once again, you did have a very, very nice comeback on, the following trade after that. So, really nothing to complain about for me. So, but
Thank you.
yeah, that's pretty much it for me. Anything else from you guys? Questions, comments, concerns on anything at all? Or does all make sense for you guys? I think everyone's good. See anything? All right, cool. Yeah, if you guys don't have any questions, that's pretty much just gonna be a wrap for today, right? We talked a little bit about, different things that I really try to look at every single time, we come into the week. Different indicators and different, patterns that we use. And then we also talked about, what we actually look at when we're actually in a trade, right? What type of, ideas go through my head, right? Obviously, in today's, examples that we were looking at, right, the only thing that we took into consideration really was just going to be price action. But a lot of you guys know, right? One of my biggest indicators is going to be, how individuals move, right? So I use that extra confluences within the individual. So a lot of times that will pretty much give me about like 5 to 10 plus, extra confluences, when I'm in a trade, when I actually start incorporating the individual. So then you'll see, right, everything kind of, will really just make sense and give me the confluence to actually just, hold the trade longer or, you know, so on. But yeah, like I said, for today's example, all we really did was just use, the actual price action. Um, of the actual chart that's being given to us, which then again, this really should be the main thing that you could be focusing on. But as you guys know, for me, like I said, a big confluence for me is going to be the way I use the individuals to add confluences onto the trade there. But yeah, if there's no other questions here, really hope you guys did enjoy today's live class. And then if there's no question, we'll pretty much wrap things up here, and then we're gonna pick things up with a new topic with our next class next Friday. Then, all right,
Thank you,
all right,
Alex.
perfect, guys.